Target and BJ's Wholesale were leading the way. Over the last month, though, those names have lagged their peers. So what we could hear in the reports that could change the momentum, I don't know. We'll see. Guy, what do you make? Target's been really the big laggard that we've been focusing on so much, especially when you look at the divergence between Walmart and Target. We know that we like to compare them, even though we also know that the mix is different. But if you were to look at these two names now, do you see opportunity before we hear the results?
First of all, welcome.
Thanks.
You're on Worldwide Exchange this morning. You're here now. Yeoman's work, number one. Number
Thanks.
two, I think if you want help in Target being long the stock, I think you're hoping for some change in terms of the C-suite, because this administration over the last 3.5, 4 years has not done a good job. You know that better than anybody. You're not at liberty to say, I will say that. And I think that's what people might be waiting for. Valuation has been compelling for Target for the last 3.5 years. It's been a foolish avenue to go to. Walmart's doing everything right. Target's doing everything wrong. I think if you want to be long the stock, you're hoping that there's some sort of shakeup.
Yeah, I'd just add that, none of the big box retailers, Walmart, Costco, you could throw like Best Buy and Dick's in there. I mean, none of them have confirmed the new highs in the S&P 500, right? So if you think about some of the headwinds that, some of these retailers have had as it relates to the potential for a protracted trade war, these, I guess, investors are not saying that they're out of the woods just yet. We knew there was a pull forward, a lot of inventory, right, stocking up against those potential tariffs here. But I do think, over the last 2 months, we've had numerous new highs in the S&P 500, and none of these stocks have really participated. I'm having a hard time just looking at any major retailers that have actually confirmed the new highs in the S&P 500. So to me, that places potentially an opportunity, like if you have beats and raises across the board. I just don't see that happening. And I think that if you do have this better than expected Q2, it's likely not too different than what we saw in Q1, again, about a pull forward a little bit. And some of these names, you mentioned Target. Walmart's expensive stock. Costco's an expensive stock. You could say, well, they're always expensive. They always have been. But right now, I think they face a very different challenge than they have over the last couple of years. And it might not be too different than some of the supply chain issues they had during COVID and right after.
Courtney, when I'm thinking about a name like Home Depot, it's an important stock. It's obviously part of the Dow, but it often doesn't move that much on earnings, not as much as maybe some of the other retailers do. But we love to read through the details to see what they're talking about for the housing market. And of course, we have this very tight supply. So if you're going to play a name in housing, do you want a home builder or do you want a home improvement retailer like a Lowe's or a Home Depot?
Yeah, and it's going to be interesting to see how this plays out, right? Because interest rates are still high, and a majority of homeowners have mortgages under 4%. So even if rates come down a little bit, there's just no moving on those existing homes. And so what Home Depot has been saying is this is actually good for us because you are going to see more people improving their homes. And they have a lot more of the professional business. They call that their pro business, which really should benefit them. They're expecting actually that to return back to growth here in 2025. So I think the hope is that you start to see that translating. But in the overall housing market, I do think that higher interest rates are still a good thing for your home builders because those existing homes aren't coming on, which means those younger people who want to buy houses, those new homes are what are going to fill the void. At some point, you want to see rates come down because that's really what's going to bring more people into the market. But in the meantime, Home Depot's saying it should be a good thing. We want to see when earnings actually come out.
Tim, there's so much focus on tariffs and the impact of tariffs on some of these stocks. I think we're really only going to see it for maybe half the quarter, and certainly not to the degree that could have been when we heard those first levels from April 2nd. What do you think investors need to understand about what we're going to hear and what the stocks are already pricing in now as it pertains to tariffs?
They need to feel comfortable with the merchandise mix. So those retailers that don't have the milk and eggs component are the ones that I think we're most concerned about. Now, we have to have some understanding also from the retailers. And I actually think this group is going to surprise in terms of where at least consensus is and what this quarter was like. And there are dynamics, especially related to some pull forward. The interest rate sensitivity around Home Depot, I think, is something that's moved the stock. It hasn't necessarily brought more people into the stores. But I think what I want to hear about is that business in between back to school and Christmas, because that's the most important dynamic for the next 4 or 5 months, because that's the part where tariffs will really see people fall off the cliff in terms of demand, or where high credit card bills that Guy talks about this all the time. I mean, there are dynamics on the credit side. I'm worried about everything other than back to school and Christmas. And I think the places that you stay are the places that have proven to be resilient in the face even of tariff conjecture. That is Walmart. That is Home Depot. And I'm going to pay more for them.